Okay, so let's talk about the balance sheet. What is the balance sheet? It shows the financial position of a business organization on basically a certain point. This can be a time or date. Thus, sometimes we can see it's called sometimes a statement of financial position. This is usually done at the end of the month or sometimes at the end of the year. And it presents the view of the business that the assets are equal to the claims that those assets are giving. So there are three parts to this. There are assets, liabilities, and stockholders' equity. Stockholders' equity is sometimes referred to as capital. And for sole proprietorships and partnerships, this stockholders' equity will be replaced with owner's equity. And as usual, the balance sheet always follows the equation that assets equal to liabilities plus stockholders' equity. So what are assets? They're basically economic resources that the organization can use, that they can expect on them to be beneficial in future operations. So what the heck does this mean? Well, there are two types. They can be physical and non-physical. They can be like land, building, equipment, or they can be non-physical like patents, trademarks, and copyrights. Also, some examples, you can just say like cash, money, accounts receivable, which is cash that customers owe to the company. Okay, let's talk about liabilities. These are the stuff that the business owes to certain people, like creditors. They're the amounts owed to suppliers, credit card bills, etc. And they're basically recognized by law. And liabilities give the creditors the right to force a sale of a company's assets, even if the company fails to pay what it owes to the creditor. Let's add that in just for the record, to the creditor. Okay, and creditors have the right over stockholders and always must be paid in full before the stockholders can receive anything. And stockholders' equity is what would be left over if all liabilities were paid. And this is sometimes referred to as net assets or net worth. So here's a sample balance sheet. You can see I've done it for a car dealership. As you can see, the assets, total liabilities, and SE. I'm just putting it SE as an abbreviation for stockholders' equity. And you can see this follows the accounting equation that total assets equal liabilities and stockholders' equity. For the car dealership, and assets could be like the cash they have, the supplies, like staplers, papers, forms, the cars that they sell, the rent they have to pay for the building. Liabilities could be like the utility bill, the transportation fee for transporting the cars back and forth, and there's always the retained earnings in the stockholders' equity. And as you can see, these all have been added, as well as these have all been added together. And the way you know that the balance sheet is in balance, as you can see, it's by its name. The balance sheet is when total assets equal to total liabilities and stockholders' equity. Thank you for your time. I appreciate watching, and please, as always, subscribe. Thank you. Have a good day. Goodbye.